All right, I see. What I want to do for you guys right now was just go over a bit of the, fear and greed indicators, a little bit of where to look for the CPI data, and also, an overlay of what everything looks like when it goes on to SPY. Okay, so here, FinViz, I've been reposting this. This is where I would hit share map, and I'm just gonna, give you guys the heat map because there are the, the bot generated heat maps that we get for the Discord. However, this does give you a better visual in terms of, where the different sectors and how they're doing in terms of what's more green, what's more red, and you have your bigger percentages there. Now, keep in mind too, if I just went to the 1 month performance, we've had this pretty awesome little rally recently, okay? So, the one sector that's, struggled has been that healthcare sector. You do notice in, Alibaba did drop in that time as well. And Google and Meta were fairly flat comparatively, but Apple, Amazon, Tesla all had these giant rallies so far. But let's go into a little bit in terms of the fear and greed, because, if you were to take a look at it right now, we're right at neutral. So it's not exactly too advantageous to, take on any certain, particular side right now because people are kind of uncertain. But this neutral reading, I want to point out, is actually based upon certain things being in extreme greed and extreme fear. So let's talk about that. What we do have is we have this timeline, all right? And what I did before we got into this was I did screenshot this. What you want to notice is that middle line is the 50, and we did go up to about 77, 74, right, 75. And we've been as low as 7 down here, okay? But we do have extreme fear before it went up, came back up, and let's take a look here. All I did was I took SPY, and you can point out here that we had pretty much the top right here, okay? And that correlated with, hey, people were very greedy or getting greedy and less greedy over here, okay? And so we have these peaks that exist, and then we have these lower bounds where there's a little bit more indecisiveness, you might imagine. Okay, this is technically a peak, you might think of it that way. And we're getting less fearful, right? We're getting to the greedy side of things, okay? However, what I do want to point out though, is that this ongoing downward trend, right, of greed, we've continued that as well. So, or, of neutrality, and when every time we go to greed, it rejects down from. So I just want to point that out with the way that the fear and greed readings work. And this is just the overall sentiment of markets, okay? Now, when I go back in here, you'll see how they measure it. And one thing to keep in mind here is the 125-day moving average. And they're showing, we are respecting that when you think about that. We're bouncing off of it. And the last few times when we got close to it, right? What was this? This was January, February here. And you have March right there. Well, January right here, right? And then where was it? March, you had the March lows here. So keep in mind, when people start to get more greedy, it start to look for the fear that's going to come back into the market. So that's just one thing to think about right there. Now over here, we've got stock price strength, net new 52-week highs and lows on the New York Stock Exchange. We have been in this downtrend. We did break out of that type of a downtrend, but you still got to keep in mind, we're still under in terms of there's still more new lows being made in the last year, okay? There is extreme greed being shown, right? Highs and lows, so hold on. Yeah, more highs than lows. It's a bullish side sign and signals greed, okay? So we're starting to see more highs and lows compared to before. On the stock breadth, okay, McClellan volume summation. At this one's kind of, when you take a look at it, it's just been going straight down, okay? We haven't really seen any sort of rally from that, okay? This is measuring the volume of shares that are rising compared to the number of shares that are falling. Okay, so we've got more that are falling right now. And so there's a lot of fear in the markets here. So do you see how it's conflicting greed and fear? Then what else? Put to calls. Well, 5-day average, we have more calls right here, right? Because it's a fraction under 1. So when it goes above that, that's the fear, right? That's the puts. But we've been under 1 and still, like, you know, we're coming back up a little bit in terms of the number of calls. So if this were to rebound back up, right, that'll signal that the market generally in that situation is starting to go back down. People are starting to get a little bit more fearful. So extreme greed means we should probably be fearful in this situation, right? And then extreme greed up here says be fearful. But here, extreme fear says you could be greedy. But I want to kind of think of it this way. Stock price breadth is about right, the volume of shares that are rising compared to the volume that are falling. Okay, so there's that thing called the 80-20 rule, right? Where 80% of our markets are made up of by 20% of the companies, right? And you can kind of see it that as well. There's more than just this in the markets, but a lot of these little tiny ones, yeah, there's a ton of companies that make that up. But do you notice how, you know, if you were to just pick out 80% of this, there's, you know, 20 out of every 100, if you think about it. So a small portion of the market is controlled by, a large portion of the market is controlled by a small group of things, okay? It's just the way that things work in this situation. So, however, if this is just saying volume and there's a lot of small companies and those small companies are all going down, do you see that? And so there's fear in the smaller situations and the small caps. But when you take a look at, you know, the mega and the big companies, they're still doing great. They haven't gone as far down. And that's why SPY is moving alongside with a lot of these bigger companies that have rallied over this last month. So keep that in mind there, okay? What else? Put to call ratio, we talked about. Market volatility. So the VIX has been coming back down. We are down at that trend line and we technically did break through it, okay? So this isn't the best one, but if I were to pull up it on TradingView, we've kind of just peaked down below and then come back in. So we'll have to see, do we go down below to the 20s or do we just reject and start going back up? Because you can notice when it does hit this trend, it has a little bounce up toward this level, up toward the orange, the 50-day moving average. So you'll probably see something like that, relax a little bit before more fear comes into the markets. So keep that in mind. It's neutral right now, okay? So it could go either way in terms of volatility. Safe haven demand, this is where you look for the stocks versus the bonds because bonds are obviously safer. So right now, a lot of money's been flowing back toward stocks, okay? So stocks are riskier. Therefore, when money flows to the stocks, and we are flowing toward the stocks right now, that actually shows that, you know, ultimately people are being greedy. You're getting more from the markets than from the bonds that you would be putting your money into. Then here, you know, so keep in mind that means be fearful, probably. Junk bond demand, okay, is extremely fearful. What does that mean? Junk bonds carry a higher risk of default. So therefore, when you go and when they crave junk bonds, the yields drop, okay? And so as the yields have gone up, that means people are getting away from these. The junk bond yield is going up and people are leaving, going away. Now this big, you know, drop and rally was due to the fact that people are willing to take on more risk recently. However, it's still in a fearful situation, okay? So, you know, you guys can go through this and read this on your own a little bit more, but I just want to go and give you guys a quick overview because I know I've been posting this all over the place. And if you guys do have questions, please let me know. You can screenshot this for yourself to help yourself understand. It is also useful to kind of stretch these out just a little bit, you know, the chart itself. So I'll have that posted in the Discord for you guys too, okay? CPI does come out on Wednesday morning. I do want to point out that this is a big catalyst for what's coming up. And I do believe that it is what will tip this back into the fear or the greed situation. But you also want to keep in mind, it is the whole Warren Buffett, be fearful when others are greedy, be greedy when others are fearful. Right now it's indecisive, but there are situations that show that there is bias toward the downside overall. The markets themselves have not exactly corrected a lot of the issues that exist. And one of the things that I will leave you guys with here is actually this big picture chart. Let me just copy it over right now. And I've been showing this to my ICA students that we're not out of the woods yet, because historically, oh, that's not the one I wanted. It's copying, there we go. The yields of the 10-year versus the 2-year, the 2-year is winning out, meaning that the numbers are now under 0% when you subtract them. So usually you get a bigger percentage for a 10-year yield, and then you would have a smaller percentage for a 2-year yield, and therefore the numbers are always positive. However, right now, what we have are that the numbers have dropped to negative levels. And if you kind of take a look, when do those things happen? And this is what we would call is a leading indicator that things are going wrong in the economy, things are going wrong financially in terms of price stability and the bubbles that have been created. In a sense, money isn't flowing correctly, and as a result, corrective measures need to be taken. And so there is a little bit of this belief that suddenly the Fed is going to be able to relax rates, and that's how we've gotten these rallies right now, right? Because the Fed itself and everything has said, hey, we probably don't need to be as fearful, because there were certain readings that tell us that we are doing better as an economy. But when you take a look at some really big indications and look at the big picture, there is a lot of issues with what's going on. So we'll have to see. This is a ominous sign that things, we can still rally right now, but there's still very likely could be another leg down. When that will happen is hard to predict. There's a lot of people saying by the end of this month we'll start to move back down. But we are at this part where we have two segments. If you think about it, right now we're coming back up into that first top segment of the first leg down. So how far we go up there, we could head back up to this little area where there's plenty of supply and demand, but at the end of the day, it's still got a bearish bias, especially if this does start to go toward the greedy side of things. Okay. All right, that's all I wanted to share with you guys today. If you guys have questions, please let me know, but we'll chat from there.